My name is David Bell. I'm the Associate Vice President of Advancement and Alumni Relations here at the college, and I'm delighted to be the moderator for tonight's webinar. And so I'd like to first welcome all of our viewers who are tuning in live or via on-demand download from our website. Georgian's Advancement Department produces the speaker series to provide valuable learning opportunities for our alumni and our friends in the community. We tell stories of alumni success. We provide industry insights, professional development, and topics like tonight's webinar focused on estate planning. You'll notice that your microphone has been muted for this event, but please feel free to type questions in the Q&A box and in the chat box. We'll be monitoring the discussion, and there will be some time for question and answer with our speakers at the end of this webinar. Behind the scenes, my colleague Jessica Camella, Georgian's Annual and Legacy Giving Officer, is helping to record tonight's session and facilitate any questions you have for our panelists. As we do at all Georgian events, I will now read our land acknowledgement. As this event is virtual and we are not all in the same space, I recognize that this land acknowledgement might not be for the territory you are currently on. We ask that if this is the case, you take the responsibility to acknowledge the traditional territory you are on and the current treaty holders. At Georgian College, we acknowledge that all campuses are situated on the traditional land of the Anishinaabe people. The Anishinaabe include the Odawa, Ojibwe, and the Potawatomi nations, collectively known as the Three Fires Confederacy. Georgian College is dedicated to honoring Indigenous history and culture and committing to moving forward in the spirit of reconciliation and respect with all First Nations, Métis, and Inuit people. We have tonight with us two panelists, Alex Cardno, Wealth Advisor with Scotia Wealth Management, and Tony Cariati, Estate and Trust Consultant with Scotia Trust. I'm going to provide a bit of an overview on each of our speakers with us and a bit of their background, and then we're going to turn it over to Alex and Tony, who are going to have a conversation that's going to take us deep into the idea of estate planning and hopefully answer some of your questions that you have as you start to think about this topic or come to this webinar tonight with some specific questions. So Alex Cardno is part of a new generation of wealth advisors who believe financial planning is the cornerstone of effective wealth management. Alex was raised in rural southwestern Ontario and believes passionately in the power of giving back to support thriving communities. Alex holds degrees from the University of Waterloo in biomedical science, as well as an MBA from McMaster's DeGroote School of Business. He supports his local community through a variety of volunteer roles, including supporting us here at Georgian with our community signature events and tonight's Legacy Giving webinar. Welcome, Alex.
Thank you.
Tony is an estate and trust consultant dedicated to helping clients preserve and transfer their wealth. Through advice and guidance on estate planning opportunities, he works with clients to facilitate the production of estate plans, incorporating professional executor, trustee, and attorney for property services. Tony holds a specialized Bachelor of Arts in Political Science from York University and a Bachelor of Laws degree from Osgoode Law School. He brings to the role over a decade of relevant experience as a lawyer, practicing in the areas of estate planning, administration, and litigation, supplemented by his practical skills and competencies earned by working in a small business and as a business owner-operator himself. Welcome, Tony.
I think Tony's muted right now.
Okay. We will unmute Tony very soon. And so thank you for both Tony and Alex for joining us tonight. And so just to give you a sense of what's ahead, we're going to have around a 30-minute fireside chat between our two panelists. And as I said, they're going to introduce us to the topic of estate planning. In the final segment of the webinar, Tony and Alex have agreed to share some thoughts on the role of philanthropy in estate planning. And we're looking forward to a great conversation. And please remember to submit your questions, and Jessica will ensure that we have time at the end of the webinar to answer those. So without further ado, I'm going to pass it over to Alex and Tony. Thanks, gentlemen.
Thanks, David.
Thank you so much.
Tony, you can hear me okay?
Yes, I can. Thank you, everyone. I apologize for the technical difficulties, but I'm pleased to say that I can hear everyone, and hopefully everyone can hear me.
Great. I can hear you just fine. So thanks for having us, David. Really, the idea behind this webinar was to give everybody a bit of a estate planning 101 overview with Tony, and then in the second half, talking a little bit about how charitable giving can be a part of your estate plan. So before we get into a bit of a Q&A between myself and Tony, I'll just give you a bit of background. So my role at Scotia is kind of two-phased. One is around investment management, while planning for both present and future retirement needs. But secondarily, we do financial plans for our clients. And part of those financial plans happen to be estate plans. And at Scotia, I have access to specialists in estate planning, and that person happens to be Tony. So who better person than Tony to give us a bit of an overview on estate planning 101. So I guess before I get into some questions for you, Tony, do you just want to maybe briefly chat about what your job here is at Scotia?
Absolutely, Alex. So I am an estate and trust consultant with Scotia Trust. And in my role, I meet with clients and their families and find ways to transition wealth from one generation to the next in a tax-efficient manner, and more importantly, doing so facilitating the wishes of the client so that what they consider important to them is facilitated in their estate plan.
Fantastic. So I don't think of anybody better to give everybody watching an overview on what is estate planning and going through some topics. So if you're ready, I'm going to fire off a few fast questions here about estate planning that really will give people a good base of what we're going to talk about. So Tony, can you explain to me what is a will?
Absolutely. So it sounds like a very basic question, but it's actually quite important. So on a fundamental level, a will is a document that ensures that one's wishes are reflected in their estate plan, and it ensures that assets are transferred in the way that we would like the beneficiaries to receive those assets. So in other words, it is the guiding document that reflects one's wishes and ensures that what they would like to have happen with their estate is indeed carried out.
So when they pass away, it's a roadmap so that the assets can go where that person wants them to go, if I'm understanding correctly.
That's exactly it, Alex. It ensures that whomever's looking after the estate has that guidance, and that the person who's creating the will, they know precisely what will happen with their estate because they've laid it out in the will.
Okay, perfect. And I guess the next question to me is, that person that is running the estate, what is an executor?
So the executor or executrix is the person, people, or entity, be it a corporate entity, that actually carries out the terms of the will and actually does the estate administration. So they would ensure that all the instructions and all the wishes contained in the will are indeed carried out. They carry out the various tasks in the estate administration, everything from ensuring that funeral wishes, for example, are carried out, through to getting the final clearance certificate from the CRA, and all the 100 different tasks in between.
Okay, got it. And in a different topic, what are powers of attorney then?
So this is a great question because I find that often clients may interchange the two, and sometimes they may inadvertently conflate the two. So while the executor deals with one's estate after the person has passed away, the power of attorney and the attorney for property and the attorney for personal care are actual documents that look after one's finances and their healthcare needs during their lifetime. So in other words, if somebody becomes incapable or unable to make their own financial decisions or their own healthcare decisions, the power of attorney for finances and the power of attorney for healthcare gives somebody or people the authority to act on the incapable person's behalf. So between the will and the power of attorney, I would say these are two essential elements of an overall estate plan.
Okay, so powers of attorney when someone's alive and executor when someone has passed away. Is that correct?
That is exactly correct.
Okay, got it. And what is estate planning when we talk about the general term of estate planning then?
So this is where the will, the power of attorney, and the individuals who carry out the role of executor and attorney for property come hand in hand. So the overall element of estate planning is to determine how one would like to have their estate passed on, and likewise ensuring that they select individuals that will look after not only one's finances, but also make the healthcare decisions for individuals that become incapable. So estate planning entails looking at one's estate, having a will in place and putting one's wishes in the will, and at the same time, having a power of attorney both for finances and for personal care, and ensuring that proper individuals are selected to carry out those duties during one's lifetime. So overall, it ensures that there's a smooth transition of assets when one passes away, but at the same time, also ensuring that during one's lifetime, should somebody become incapable, you have those that will look after your best interest when you cannot make decisions for yourself.
Okay, got it. And some people might say, when I'm dead, it's not my problem anymore. So maybe somebody else will figure it out. So I guess the question I'd like to ask is, why should somebody have a will? What happens if you were to pass away without a will?
That's a great question. And I often get that comment as well. People say, you know what, I'm not going to be around. Not really bothered by it. But truly, it allows for a smooth transition when somebody passes away. And when I encounter clients that, have that train of thought, which I respect, of course, I point out that without a will or without estate planning, then there can be some unintended consequences that one doesn't realize. So, for example, if somebody passes away without a will, then their estate and their assets will be transferred by the applicable provincial legislation. So in Ontario, we have the Succession Law Reform Act. And in other words, there could be some unintended consequences where you may have, for example, assets passing on to people that the deceased may not have wanted the person to receive assets from their estate. Or perhaps there could be family heirlooms that they would like to have a specific person to receive, but because it's not dictated in a will, because there isn't any, then that will not be facilitated. So without having a will, the legislation will govern what happens to your assets, and it may pass on in a way that you would not like to have happen. So it allows one to have control as to what happens to their estate, what happens to their assets, and specifically, it can also facilitate a transfer in tax-efficient manners if one pre-plans ahead of time.
Yeah, okay, I gotcha. So if you don't have a will, your next of kin would be subject to whatever the prevailing provincial rules of this are. So having a will in place allows you to make sure that your wishes go, that your estate is transferred in the way that you want it to happen as best as you can, right?
That's exactly it. And I often find where I have clients, for example, that are in blended families or second marriages, or if they have specific asset types, be it TFSA, registered investments, or even if they're business owners, having the wills in place will ensure that, again, things are dealt with in an appropriate manner. So just to give you an example, for business owners, there's discussions of having multiple wills. If somebody has property outside of Ontario or outside of Canada, and they don't have a will, it could create difficulties for whomever is supposed to now try to look after the estate. And this can also cause conflict in situations where there's no executor appointed in the will, and you may have competing people then trying to apply to the court, to the local superior court, to gain standing to deal with the estate. So having a will helps eliminate those type of issues because there is clear guidance as to whom is to serve as executor, how to deal with the respective assets, and what your wishes specifically are. Again, all contained in the will.
Right, and I think the great point that you brought up is the blended family. So if you're an individual who is in a second marriage, then without having a will, that really kind of muddies the water, for lack of a better word. So having a will in that situation, it's important to make sure that you want that your wishes are respected when you pass away, right? I guess on the topic of having a will, so establishing that it's important to have a will, I know that there are some services online where you can make your own will, what we would call maybe a holograph will. It might be a template where you can plug in your own information and make a will versus going to a lawyer and having a will drafted by a lawyer. What is, I'd like to ask you, what is your personal opinion on holographic wills versus getting a will professional?
Now, I'll admit this may sound somewhat biased, as I am a lawyer myself, and I've actually administered estates and drafted wills in my previous life, practicing law. The one thing I would say, and I know it's a bit of a cliche, but you get what you pay for. So the main issue I find with the will kits and so on is that it doesn't account. It does not account for one's specific needs. And while they may touch upon some general elements when it comes to estate planning, having a lawyer, for example, go through your estate wishes with you and point out certain pitfalls can be greatly beneficial. So be that, for example, leaving assets to a beneficiary who has special needs and perhaps is receiving ODSP, some of the implications of leaving too much or too little to that individual. It could also be a matter of creating a holographic will in one's own handwriting, taking some pointers from a will kit, and then not knowing that they've inadvertently made some errors in the will itself. And I can tell you from past experience in having to assist clients that are now dealing with an estate created by a holographic will, that there are quite a few pitfalls. So, for example, trying to get affidavits to confirm the handwriting of the person who made the holographic will, trying to understand the interpretation of wording and sentences. So we joke around in law that every comma and every period, every semicolon has a meaning. And indeed it does, because it can have implications on how an estate is carried out if the person creating the holographic will inadvertently makes an error in their drafting. So my suggestion is receive professional assistance when one wants to create a will. See your lawyer. I believe that ensures to the greatest possible extent that your wishes will be carried out and will be reflected in the will, as opposed to trying to do it oneself.
Yeah, I would agree with you. We do will reviews for some of our clients, and in my career we have encountered a self-done will where upon doing a will review, it was determined that the language that was used left it open to be contested in court, and that obviously isn't what the person's wishes were when they wrote the will, right? So I think to your point, having it done professionally tightens things up and ultimately ensures that it does what you want it to do when the time comes. How about executors? How do you choose an executor, Tony?
That's always a great question. And what I always tell clients is that we should select an executor that has two things. They need to have the time and the experience to serve as an executor. And quite often, individuals may have one or the other, but very few actually have both. And, I can say in my years of practice, quite a few executors have said to me, if I knew then what I know now, I don't think I'd want to be an executor. We call it an executor's year, but it can take upwards of 18 to 24 months to deal with an estate. And quite often, it can be a stressful and thankless job in carrying out those tasks. In so doing, clients would often consider, for example, the age of the person that they're selecting. So if you name somebody who's more or less your own age, there's a possibility they may predecease you or, quite frankly, pass away shortly thereafter. So that can be problematic. Another issue could be the jurisdiction where the executor lives. So consider, where does the person live? And if I select them, will it be complicated for them to carry out all the tasks? Will they need to come to, for example, my town, my city, where I live in person to deal with the estate? Another variable, Alex, is the complexity of the estate. So are we dealing with complex assets? Are we dealing with assets that are in various jurisdictions? And will the person have the wherewithal and the know-how to deal with these elements? The other important variable, and this indeed comes up very often, is the family dynamics of the deceased. So, for example, will it be problematic if the person names one child but not other children? Will somebody be offended if they are or are not selected as executor? So there are various variables that come into play. And truly, it is a thankless task serving as executor. And one other item that many people don't realize is that when one serves as an executor, they're actually taking on potential liability if they make a mistake. So it is rather burdensome. And I always suggest to clients that they give a good hard thought as to whom they'd like to select as executor before doing so. And it's a decision that shouldn't be taken lightly.
Yeah, I agree with you. One stat that I read is that the average estate can take up to 600 hours to settle. So when you're naming an executor, I think kind of have to ask yourself, do I know someone that has the expertise to deal with this? What's the complexity of the estate? But also, do they have that kind of time to allocate on top of what they already need to do that job? So I guess, the follow-up question for me to be is, what if somebody that's doing their wills and trying to think about an executor can't think of someone, to name? What options are there out there for people that don't have somebody that meets that criteria or doesn't want to burden somebody that might meet that criteria?
That's a great question. And again, I often get asked that quite often. So I would say that there are two main elements to consider. The best option I've seen, again, in my years of practice as a lawyer and in my capacity as an estate and trust consultant, is that most, if not all, the major banks in Canada actually have trust companies that provide estate administration services. So, for example, at Scotiabank, we have Scotia Trust. The other major banks likewise have trust companies that can provide that type of service. So if a client can't truly think of anyone that they would like to have carry out the task, they should look to their major bank, they should look to their financial institution, and make the query whether there's a trust company and a service that can assist with the estate administration. Another option is that some clients like to appoint their lawyer as executor, which indeed there are some firms that carry out full estate administration duties. I would say that most firms do not. So in that capacity, they may help clients or they may help with the initial probate application with carrying out some duties. And for the most part, there are not too many law firms that actually carry out all the estate administration duties. Most of them will assist with the applications, but not necessarily with the entire tasks that are related with dealing with an estate. But in a nutshell, Alex, the two main options would be having, again, a trust company carry out the task, or perhaps one lawyer.
Okay, thanks for that. And finally, how would you choose a power of attorney?
Power of attorney is a very difficult question, specifically when it comes to the attorney for personal care, because you're dealing with a scenario or a situation where one is literally making life or death decisions for you. So again, when it comes to the healthcare component, give it a very good thought as to whom you'd like to select. I'll also preface this by saying that when it comes to the attorney for finances, most major banks that have trust companies can facilitate that service where they'll act as an attorney for property for a client. But as far as I'm aware, none of them will serve as an attorney for personal care, so they won't make those care decisions. In any case, when deciding who to choose, be it for healthcare or for finances, you need to select somebody that you trust and that you feel will always look out for your best interest. So I think that is the key criteria, that you're trusting this person to look after your finances, and you'll trust that they'll do what's right for you, they'll have that duty, and likewise, they'll make healthcare decisions that are in your best interest.
Does it have to be the same person, Tony? Does it have to be one person that does the healthcare and the financials, or can it be different people?
It can be different people, and I've had clients actually say that, where they feel comfortable with one person or individuals making the healthcare decisions, and someone else or another group of people who have perhaps the financial background or the expertise to make financial decisions. So to elaborate further, you don't have to select the same person to be your executor, your attorney for property, and then your attorney for personal care. You can select different individuals or entities to serve in that capacity. And it comes down to who is the best selection for the specific task. So who do I think will always look up for my health care? Who can I trust to make financial decisions if I'm incapable? And finally, who has the wherewithal to deal with my estate once I'm gone?
Okay, perfect. So, that's all the questions I had from the side of estate planning 101. So hopefully that gave everybody on the call a good understanding of wills, executors, and powers of attorney. At this point, I think let's transition and talk a little bit about how charitable giving and philanthropy can be incorporated into estate planning, Tony. So I'll a little bit of an overview and then lean on you to give some insights on what you've seen in your practice in terms of charitable giving in estate planning, okay?
Absolutely.
So really what I would like to start by talking about is that really there's two types of charitable giving, and I like to use the analogy of two pockets. So one pocket is ordinary charitable donations, and the other pocket being what we would call exceptional charitable donations. So on the ordinary donation side, it comes from what Canadians typically do annually. It comes from your cash flow. So think about, especially recently during the holidays, that you might have made a donation to a local charity that you typically donate to annually. That would be what we would consider an ordinary donation because it comes from your income or from your salary. The other pocket is the exceptional donations, which typically comes from the heart, just like ordinary donations, but has a little bit more thought in terms of the tax incentives. And that's because exceptional donations come from your net worth, your assets, or your investment pocket. And this occurs probably just a few times in your lifetime. As a result, exceptional donations usually require careful planning to address the charitable goal that you have, but also the taxes and the impact on you and your family. The most common, by the way, of these exceptional donations is a gift through your will and your personal estate after you pass away. So really the question becomes, when should someone consider making that exceptional donation? And the answer to that is that it does come from altruistic intent from unique to each individual, but also has to do with their values, personal circumstances, and their overall wealth. Our process is to work with clients to determine what they want to support and then address how we can support them. We always want to make sure that when we do these exceptional donations that we take careful planning to figure out the best timing and the way to make that donation. Apart from generosity, the most common triggers for exceptional donations for our clients occurs during times of tax events, such as the sale of capital assets, perhaps a business or corporation. And another common scenario is to do it as part of their estate plan. So, Tony, just to ask you, in your experience, what are some examples of times that you've seen a client decide to make an exceptional gift or charitable gift?
I've seen, Alex, two scenarios that I see actually quite often. When it comes with business owners who've worked very hard and diligently their entire life, and they finally sell off their business, I've seen clients make large gifts for the purpose of not only receiving a charitable tax credit to set off the taxable event that transpires when they sell their business, but they also have that altruistic side, and they actually become genuinely excited to donate to their cause of choice. Specifically, I've seen clients donate to nature conservation causes and creating, for example, conservatories for the purpose of wildlife. And this specific client that I have in mind actually was timing when they would sell their business so that it would best be suited for their charity of choice. So they truly had that altruistic intent when they sold off their business. At the same time, again, they're also reaping the rewards of working very hard, working very diligently, and now looking to, if you will, give back to worthy causes. So I certainly have seen that during one's lifetime, where there's a taxable event, they want to receive charitable tax credits that they can use towards that during their lifetime, but also help facilitate something that's important to them, and they can see the fruit of that during their lives.
Yeah, absolutely.
Likewise, I've also seen it through.
Oh, sorry. Go ahead.
The other example, Alex, that I've seen through is through testamentary scenarios. So, for example, one has left a very large gift through their will for the purpose of benefiting an important cause. So again, I likewise have seen that with business owners, and even with clients that are not necessarily business owners, but they've had great experiences with certain healthcare providers, or with some service at a particular hospital or a hospice. So that is very common, where clients would say, I had a very difficult time battling a certain ailment or a certain illness. Thanks to this specific health center, I was able to beat that battle and, gain years on my life. And I want to give this gift, if I can, to someone else. So I want to donate to that particular cause because it's important to me. So I would say that's another very common scenario when it comes to that circumstance. So people who will have a large testamentary gift to a cause that's important and worthy to them.
Okay, yeah. Thanks for sharing. I think that one of the points that you already touched on a little bit when you're explaining that is that Canada actually is one of the countries that encourages charitable giving the most in the treatment from a tax perspective. And before I kind of dive into that a little bit, I think I have to preface this a little bit on that. Neither Tony or myself are accountants, so we can't really get into the nitty-gritty of the tax details, but safe to say, Canada's systems evolved over the last 25 years to try to encourage this type of charitable giving for individuals and corporations, and up to the point that it's actually possible now from an estate perspective to eliminate all taxes upon your death with the donation through your estate to a charity. There's also some valuable incentives for gifting investments through your investment securities you may have, through your RIFs, RSPs, life insurance, estate assets and estate donations, and even actually some ecologically sensitive land or cultural property can be donated. At this point, I think I'd like to just break down a few of the strategies that you can use for making an exceptional gift or charitable donation, as I think some examples might help our viewers and listeners get some ideas on how charitable giving can be a part of your estate plan. The first one is actually the most common. It's through an estate donation. So the estate donation is a gift by your will, which pays out after you pass away. The reason it's the most popular is that it's actually highly flexible. It allows the donor to retain the use of their property, obviously, when they're living, and then permits that donation after they pass away. The estate donation can be claimed up against up to 100% of your income in the final 2 lifetime returns of your tax returns, plus up to almost 75% of the income of your estate return. If the gift is significant relative to your income, there is also a potential to eliminate most taxes payable upon your death. So the example to this would be in your will that you name a charitable cause as a beneficiary of your estate. And I've actually seen this in my own career, where I've had a client that had no next of kin, and when they were drafting their wills, they had to decide, where's this estate value going to go when I pass away? Because there wasn't a next of kin or a logical next transition to go to, they thought that they'd like to name a local charity, which happened to be the local hospital, as the beneficiary of their estate. And when I asked that person about that, they said, well, I'd like to choose where my dollars go to when I pass away, as I'm passionate about making that impact on a service that I used in my life. The second strategy is actually the gift of public securities. So if you have a mutual fund investment, a stock investment, a bond investment, it's actually possible to donate those to a charity in kind. So instead of selling those investments and making a cash donation, you would actually just forward the investment to that charitable cause. Now, the reason that this is a great strategy is there's actually two benefits of doing so. So first is that you would receive a tax credit to the market value of that investment, but also you would potentially save on any capital gains or gains on that investment. So for an example, let's say in a non-registered portfolio, you had a mutual fund which you purchased for $50,000. Going to present day, that investment has now grown to $100,000. If you chose to donate that as a gift to a charitable cause, you would not only receive a tax credit for the market value, the $100,000 to use against your taxes, you also wouldn't have to pay the $50,000 gain in that investment. So that's a very powerful one. And then the third way is through designating a charity as a beneficiary. This can be on registered products such as TFSAs, RSPs, RIFs, but also on the life insurance policy. So I think that the life insurance policy is also a very interesting one, because when you probably, when you purchase a life insurance policy, it's usually for a specific need, but those needs can change as time goes on. So imagine a scenario where it's a single income family and a life insurance policy is purchased so that in the event that one spouse was to pass away, there would be an insurance payout to help the surviving spouse raise the family. Well, fast forward a number of years, now your children have grown up, you're looking to retire, that need is no longer there. Potentially thinking about a charitable, designating a charitable cause to your insurance policy would be a nice way of changing that beneficiary as your situation changes. Now, I think with all three of these scenarios, it's important to make sure that it makes sense for your plan. So when we do these charitable intents and these exceptional gifts, we always engage partners like Tony, but we also want to make sure that we're running our financial plans to make sure that your needs are covered first and your next of kin's need, if you have children, are covered first. And then if there's any extra there, we can think about charitable intent and incorporating charitable intent into your estate plan. Tony, just out of curiosity, of the three that I outlined, the estate donation, the gift of public securities, and designating a charity, a registered investment or a life insurance policy, which one would you say is the most common that you've seen in your career?
I've seen most common for most clients is the estate donation route, more often than not. So most clients that wish to have a legacy, if you will, they'd like to have a portion of their estate donated to a worthy cause. I would say that the estate donation is the most common. But circling back, I've also seen people quite often as well during their lifetime use the gift of public securities when they do have a large taxable event, but also have the philanthropic side. And as to your point, where they have the public securities with a large accumulated capital gain. And they figure as a way to maximize the charitable tax credit, while at the same time also benefiting an important cause, let me donate the public securities. So I would say those two are the most common. And, for the clients that happen to have other sources of income or feel that it's not necessary to actually utilize the registered investments, to a lesser extent, but also equally as altruistic, is designating charity as beneficiaries to either a life insurance policy or registered investment. So to come full circle, most often it's the estate donation followed by gift of public securities.
Okay, perfect. And from I'm wondering if you can maybe just briefly touch on some donors want to be more involved when they make those donations. That giving to a charity makes sense, but sometimes they want to be a little bit more impacted, especially when it comes from that exceptional side of things. So I'm wondering if maybe you can just briefly chat about our donor advised solutions through Aqueduct that we can offer for those clients.
Absolutely. So there are options out there for clients who want to be more hands-on, where a donor advised fund can be created. So the idea is that the donor would essentially create their own foundation by which they can decide how they would like their charitable intent to be carried out. So it's an ever evolving foundation where they can decide the charities of choice, the quantum that they would like the charities to receive, subject to the mandatory 3.5% that comes out of their foundation. And it's a way to facilitate charitable giving to worthy causes. The overall intent is to help make charitable giving easy for the client so that it's as smooth a process as possible.
Yeah, from my understanding, it's that a lot of the administrative, like that type of work is covered by the institution that's, like in this case Scotiabank, but there are I know that the other banks do offer similar products. And then to your point that you're just involved on deciding where did these funds go to, if it's, for instance, where the impact is going to go, right?
Yeah, that's precisely it. So it allows the donor to be more hands-on, and it also allows for even a multi-generational philanthropic giving. So, and I've had quite a few families where they have charitable intent, and they'd like to have to pass on that those values to children or to the next generation. And you can have successor, for example, directors of those foundations, so that those important causes are carried on. You instill those values to your children, to the next generation, and it helps create an everlasting legacy.
Perfect. Well, that was everything that I had from the charitable giving side of the estate plan. So at this point, I think we can open it up if there was any questions that Tony and I would be happy to answer.
Yes, Alex, thanks so much. And thank you, Tony. That was incredible information, and you covered a lot of topics in a great period of time. So thank you for all that information. And some good questions have come up from our audience as we were walking through the material with you. And so my first question from one of our audience members is a living will a thing? They prefer to give while alive, and of course avoid all the costs and hassles of executors and trusts. So what are your thoughts there?
So that's a great question, and I would say that the premise and concept of a living will is from our neighbors to the south, where it's often used, and it's a bit of a misnomer. So a living will, it almost goes hand in hand with advance directives. So when clients use the term living will, it's actually referring to your healthcare decision rather than giving items during one's lifetime. So in other words, a living will provides for how a client would like to have healthcare decisions made for them should they be unable to decide on their own. So living will is truly interchangeable with advance directives when one is unable to make their healthcare decisions. So to elaborate further, David, if a client wishes to, let's say, facilitate giving during their lifetime, they can do so, of course. It wouldn't be necessary to create a documentation or a formal document to start giving out to their charities of choice. So just to come full circle, a living will is actually truly directed to one's healthcare decisions rather than charitable giving per se.
Excellent. Thank you, Tony. Another question that we have coming up here, and I know you picked up on this throughout the talk, both of you did, and this question is, I don't have a complex estate. I own some property and I have some registered and non-registered assets. how important is tax planning really when I think about my estate plan? I hear a lot about not wanting to give the government too much of my estate. How do I even get started on thinking that?
Another great question. And I would say even though one may not have what they feel is a complex estate, it's more so the rules that come into play when administering an estate that can make the process complex. So let me give you a common example where one believes that they have a very simple estate. Let's say there's an RSP, some cash on hand, and the intent is to leave an equal amount to two children. And the individual figures, well, I'll just name one person, let's say the beneficiary to my RSP, and the other individual will receive the cash from my estate. They're the same value. I now have equalization. Well, consider, for example, that the value of the RSP will now be put towards the deceased final tax return. Those returns are paid from the estate, and suddenly you now have an imbalance as to what's being given out. So the purpose of that example is to show that what may seem like a relatively simple endeavor actually can have unintended consequences if you don't go through the process of giving out or through the process of thinking about your estate plan. So when one asks, well, it seems fairly simple, how do I turn my mind to it? I would say first, ask what the objective is, what you would like to accomplish in principle with your estate. And that could be leaving everything equally to my children. And then speak to an advisor, speak to your financial advisor, your lawyer, to understand what options there are to carry that out. Because it could be there are scenarios that you have not considered. And if you just go about, let's say, creating a simple will through a will kit, you'll have unintended consequences.
Yeah.
Excellent. Thanks, Tony. And you spoke a little bit about this, but I think it's a question that we just got through the chat. And I do think it's important. If I give to a charity, won't my family get less money?
That is a common question. So in the grand scheme of overall assets, there would be less in the estate to that specific beneficiary. So let's say to the children, but keep in mind the estate itself likewise receives a charitable tax credit, which perhaps may minimize the lessening of funds going to the beneficiaries. But more importantly, it also speaks to what's important to an individual. And it's very common for clients to say, you know what, I want to leave my children as much as I can, but this particular cause is near and dear to my heart. So this is where, for example, I received my education that allowed me to pursue a career which has been fruitful and has allowed me to accumulate the wealth that I now have that I'm leaving to my children. So I want to leave some funds in this particular institution. Or going back to the example I said before, where somebody has, received the gift of a longer life by receiving great health care at a certain facility, and they want to try to pay back that facility by leaving a gift. So it is true that one may leave less directly to their beneficiaries or to their kids by giving to a charity, but I would say that is offset by the charitable tax credit one receives, and more importantly, you're giving back to a cause that's important to you as an individual.
And I would just also say that that's the importance of doing a financial plan too. We want to support your charitable intent, but only after you are covered financially for your retirement. And if you have goals of sending a certain amount to your next of kin, we would consider that too. And then from that point, we would decide, okay, what makes sense from a charitable giving perspective.
Wonderful. Well, I've got one last question, and it's I actually have a few, so I'm going to kind of do my best to kind of combine the two. And this first one is a good one. What age should someone start thinking about estate planning? And the second part, if you could just add on to your answer there, is, do you recommend any tools just to start thinking about estate planning?
Well, first off, I would say it's never too early to put plans in place. And I know it's, somewhat grim, but the reality is none of us have a crystal ball. We never know when we may pass or there may be some unfortunate circumstances. If even if you have, very few assets, if you have loved ones that you're leaving behind, if there are indeed some assets in your name, if you want to ensure that it is as smooth a process as possible for the ones that we leave behind once we pass, you should have an estate plan. So I would say it's never too early to think about what you'd like to have happen with your assets. It's never too early to have a will. And forgive me, David, the second part of your question again?
It's just if there's some general tools for people just to start thinking about estate planning.
That's a great question as well. So there are some checklists and some guides that major banks and the affiliated trust companies would have to turn one's mind to what they should look at in their estate. At Scotia Trust, for example, we have a will and estate planning guide that we work through with clients, and we consider what's important to them conceptually, and we also give them some suggestions and recommendations for their consideration when looking at their estate plan. So, one item is to turn to your financial institution and their trust company as to what they can do for you in terms of initial checklist documentation, and likewise speaking with your legal advisor, where they can guide you along that path. So I think that would be a good starting point, and doing so in the guise of thinking, what is important to me at this point, and how can I help facilitate the process of passing on to the next generation in the most seamless manner possible.
Excellent.
I was going to bring up that checklist too, because it's something that you can use, you can go through, and then if you are going to go and see a lawyer to get that will professionally drafted, at least if you go through that checklist, you won't feel like you're going in blind. You've done a little bit of work, and you can ask the right questions when you go to talk to that legal professional.
And forgive me for making this, this selfish plug here, but today's webinar, it's a lot of information, and hopefully this webinar will serve to some folks as that first tool for them just to get thinking, because a lot of great material covered here, and we will have this available on demand as well on our website. So that concludes our discussion tonight. I really want to thank Alex and Tony. This has been fascinating. Like I said, you recovered an incredible range of material, from taking us from just the basics to what is a will, to talking about how some of this estate planning tools and these conversations can help you think about the type of impact you may want to have with your family and with those charities that you support. And so thank you for sharing that expertise, and thank you to our online audience for being with us tonight. I did want to announce that, as a thank you to Alex and Tony, we've made a contribution to the Georgian College Student Financial Aid Endowment, so that our students here that are pursuing their academic dreams and building their careers will have access to some new financial aid in the next term. So thank you, Tony and Alex, for being here. We're going to pull up a slide just with Alex and Tony's information. If there's any questions, they have indicated that they are available to receive any inquiries as well. If you have any questions about Georgian College and its legacy giving program, my colleague Jessica Camella's information is also listed there. We will ask that you take some time to complete an event survey that Jessica will be sharing, and that's very helpful to us as we plan out future speaker series events with the type of information and topics that are important to you. So at this time, I want to say thank you to everybody, and have a good evening.
Thank you, David. Thanks, Tony.
Thank you.